Good morning, everybody. Good afternoon, good evening, depending on the time you're watching this video. So, welcome back to another episode with Make Money with Big Team. And today we'll be looking at how how to create passive income with investment. So, imagine waking up and earning money even when you're not working, or you're sleeping and your money is increasing or multiplying for you. It sounds like a dream, right? Okay, don't worry. You're going to wake up to the reality now. So, well, that's not the idea behind passive income. Passive income isn't about getting rich overnight, it's about building assets that can generate income over time. In this video, I'm going to be explaining the passive income skills, how it works, and the most common investment based passive income sources and how to get started. So, what is passive income? Passive income is the money you earn without actively trading your time or working in the day every day. It's like the little money you earn while trying to just be yourself or doing other things at the end of the day. So unlike a regular job where you get paid hourly or weekly or daily or monthly depending on how your work is, passive income can continue even when you are sleeping, traveling, spending time or even vacationing with your family. So the key is owning assets that will produce more money or increase interest over time. So now we're looking at the different sources of passive income. The first source of passive income is dividend stock. So some companies share parts of their profits with the investors through dividend. So when you own shares in these companies, you may receive regular payments or monthly payments or quarterly payments depending on how the company functions. So many long-term investors reinvest these dividends and buy more shares and accelerate the growth through compound interest. Over time, a growing dividend portfolio can build or become a very powerful source of passive income because over time it tends to create cash for you or causes a rebound in cash. So at the end of the day, the money you've put in first time is giving birth to money that is going to be giving birth to more money. That's how that one works. That's how dividend works. So the second one is ETFs. Now, many ETFs hold dividend paying companies among them. So, this allows individuals or investors to receive income while benefiting from the diversification of their stocks and shares. So, instead of relying on one company, you're spreading the risk across many businesses. And that's the one reason why ETFs are popular among beginner investors. So, the third source is real estate. Rental properties can generate monthly cash flow, like you've already heard about the apartments, the house rent, and all that. Find out that all those little rentals, because the person is not buying it for ownership, is buying it for rent. So the money comes in over a period of time, depending on how long you want the person to be paying for. So tenants pay rent, and after that they pay expenses. The remaining income that you get from the expenses you do after the tenants pay rent is your profit. So while real estate usually requires more capital than stock, is that it remains one of the most popular passive income generating skills or passive income strategy because over time they continually pay and pay and pay and pay and pay. It's something that is fixed. It's not like a company that may shut down one time. It is fixed. The only thing you need to do is repair and renovate to meet up with the state of the art standards that are running on buildings. So the fourth one is REIT. The REITs, yes, if you don't know what it means to buy physical properties, REIT means real estate investment trust. And they can offer you exposure to real estate through the stock market. So instead of you to buy the house or owning physical properties, you can buy them through stocks and dividends. So the REITs often disburse a large portion of their income to investors to make them attractive for income focused portfolios. Now, it's not every portfolio that carries these REITs, but if you want to be mostly on income or earning from it, that is earning dividends or not just like compounding, like the stock increases in price or something like that, like owning dividends, um owning stocks that pay you dividends, and at the end of the day the dividend going to reinvest. That's where you see most REITs, because that place is an investment trust fund. So It's more or less like where you put your money and expect it to grow instead of like owning it. So the biggest passive income myth is that it is not truly passive in the beginning, because you have to like put your money, put your time, and put your skill. But usually, once you start investing, just like normal compound growth, once you start investing, it will start getting easier and easier. And at the end of the day, you will get what you're looking for. So let's do a little recap. Passive income comes from dividend stocks, ETFs, real estate, and REITs. The goal isn't to get rich quick, like I always used to say. You can never get rich quick with investments, but the goal is to build assets that can generate income for you over the years. So start smart, stay consistent, and be focused on long-term growth. And don't forget, if you enjoyed this video, please like, subscribe, share, comment, and also send to people that you know that they need it. Thank you for watching, and I'll see you in the next video. Bye for today.